all want foresight, not hindsight. Yet nobody ever wants to hear that they'll look back on this moment and kick themselves for missing out on a terrific buying opportunity. Take today. The stock of Chipotle got clobbered like a baby seal, down nearly 10%, because it ever so slightly failed to impress on a couple of line items when it reported last night. In hindsight, I think people will look back and curse themselves for missing this buying opportunity. They probably won't even remember why the stock sold off. As someone who's run restaurants, I can tell you that the most important considerations are traffic and throughput. For the past couple of years, most restaurants have been trying to walk a tightrope, raising price enough to pass on higher costs, but not so much that it drives customers away. Chipotle's different, though. They could raise prices to more than offset their higher costs, and it didn't hurt traffic one bit. That's how much people love the food. That's a very rare set of it's almost impossible to do what they're doing. But even if you have great food like Chipotle, you need to be able to speed up throughput to meet all that demand. Throughput's the single biggest determinant of success here, and Chipotle struggled mightily to maintain it. People will go elsewhere if they think that line's too long. You can't keep anyone waiting, especially when your traffic's as high as I just mentioned. That's why when I read through the Chipotle conference call, I'm less concerned with same-store sales or revenues per unit right now, and more focused on that new dual grill. They can cook chicken in 4 minutes rather than 12 minutes. With steak, it's even faster, 1 minute instead of 4 minutes. Right now, this high-tech grill is only in 10 high-volume locations, and it's working. That's going to dramatically speed up throughput as they roll it out worldwide. That kind of throughput will bring up a store's annual sales rather dramatically. That's what's important here. I know there are many people who see Chipotle stock down this much, and they assume the stock's peaked. I get it, but I disagree. I've liked this $1,883 stock since it was at $300, and I'm not backing away now. That traffic's higher. Come on, prices aren't up that much. Throughput will soon be much better. What's not to like? Sometimes you just have to trust the process. Here's another one, Honeywell. Today it reported the company beat estimates, had higher segment margins, revenue was on target, backlog was up, and the aerospace franchise is the best in the industry. Only one line about warehouse automation was actually weak. That was telegraphed, yet the stock plunged more than 5% today. I think that's a severe overreaction. We own Honeywell for the Charitable Trust, and we have a strict ranking system to help guide you. When the stock roared to the 208, 209 level from one of the 190s, we downgraded Honeywell from what we call a 1 to a 2. 1 means buy now, 2 means buy in a weakness. I feared the next quarter would be seen as a dud given how much the stock had run, and sure enough, that's exactly what happened. We took Honeywell back to a 1 today because there was absolutely nothing wrong with the quarter. Time to build back the position. Let me give you one of the last ones to keep things in perspective. A year ago, Align Technology, the company behind the revolutionary Invisalign teeth straighteners, it hit a speed bump. They blamed weakness in China, problems in Ukraine, inflation. The stock got clobbered, just clobbered, falling from the north of 300 down to the 170s in just 3 months. Joe Hogan, straight-shooting CEO, told you not to worry. Hardly anybody took him seriously. Those excuses really didn't seem to hold up under close scrutiny. The bears didn't seem to care that if you owned Align since June of 2011, you'd have a better than 1,500% gain, just a fabulous long-term track record. They wouldn't give Hogan the benefit of the doubt. Then last night, Align reported an amazing number. And today, the stock rallied $45 to $385, more than double where it was when Hogan gave you that litany of excuses that the market didn't want to believe in. Some companies and the people who run them are simply bankable. And that's true for Chipotle. It is true for Honeywell, just as it was true for Align when the stock rolled over last year. Hindsight says you should have bought Align and tweaked this. Foresight says go buy Honeywell and Chipotle right now, because they're in the same situation. I like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you next time. Last call starts now.